Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. We're in the month of June now. Now, how are we starting the month of June? We're starting it on a down note. Dow down about 400, NASDAQ down about 150. This is a little bit of consolidation. Last week we had that big run up, 6% run up last week, and this week we're getting a little bit of consolidation. We're going to probably come down and fill the gap in the QQQ and the SPY. Now, I do think the lows will hold. I think we've seen a short-term bottom. I don't expect us to drop below that, but we're probably going to come down and make, well, a higher low, and then we're going to head up higher. We're going to get the short covering rally. Now, let's talk about why we're going to have that short covering rally. Well, it could be a lot of reasons. We got the Fed meeting coming out. Well, this month they're going to meet, right? And they're going to raise it, well, 50 basis points. They're going to raise interest rates by 0.5%. That's predicted. That's priced into the market. Now, and I believe they will do that. I do believe they will do that. But what if they make an announcement? But yeah, we're going to do it in June. We're going to do it in July. And then we're going to pause. What if they said they're going to pause after July? Well, you would see the mother of all short covering rallies. And now that could happen. You see, I don't believe that they can raise rates past July. Yes, they're going to raise it, a 0.5 point in June, 0.5 point in July, and then I think they're done. I think the markets will start to come in. But now if they announce that they're done, if they announce that they're going to pause, well, that's going to send things higher. Now, why can't we raise it more than that? Well, we're $31 trillion in debt. You keep raising interest rates, we don't have money to pay the debt. Now, they started the taper this month. The taper started it today in June. They're not going to buy these mortgage-backed securities. They're not going to buy these treasury bonds. We'll see if that actually holds true. Personally, I think they're raising interest rates so that they can lower them. They're going to reverse course. The Fed doesn't have a choice. We can't make the interest payment on $31 trillion. Now, you would think when we spent $31 trillion that we would have this great infrastructure in our country. You just drive around. Our roads are terrible. Our bridges are so old that they might collapse. Actually, some of them do collapse. Go to an airport. Our airports are starting to look like third world countries. It's terrible. We have no infrastructure. We got nothing for our $31 trillion. And now they want to raise interest rates so that interest on the $31 trillion, which us taxpayers are responsible for, we have to pay more in interest. And that means we get no services from the government. We don't get the roads fixed. We don't get the airports upgraded. We don't get the bridges repaired. We get none of that. No, we just pay the interest on the $31 trillion. That's the type of position our leaders have put us in. But could this cause a short covering rally if they say they're going to pause? I actually believe we're going to have a big short covering rally. I think we can do a rally up, maybe even up to where the recent highs were. I still think we have a topping out process. I don't think this is the big collapse. A lot of people will tell you this is the big one. I don't think so. It's too orderly. The big collapse is coming. I do think it's probably still off by about 6 to 8 months. We'll see how that all plays out. But this one, they're going to rally it back up. They're going to rally it higher. Now, what else could cause a short covering rally? Well, what if Russia retreated from the Ukraine? You would see a big short covering rally, right? What about stock buybacks? Stock buybacks are at record highs. Companies are buying their stocks back hand over fist. What does this do? It makes the market go higher. It's just the way it works. Now, the reason I think that we're pulling back here and we're consolidating is there is still a lot of fear in this market. There is a lot of fear out there, and it's going to get us to come back down. But I'm telling you, there's going to be a short covering rally. They're going to pump this thing back up. Just my prediction. I'd start nibbling here on some of the stock market if you want it. If you want to be in for this short covering rally. That's just my opinion. Let's move on to the housing market. All right. Well, the housing market, how's it doing? Well, this is very fascinating to me, and I don't really this should be a warning sign to all of you. Actually, I do understand it. Right now, according to Redfin, about 1 out of every 5 homes has had a price reduction. Why? Well, that's 20%, right? 20% of homes that are listed have already reduced their price. The reason is because the housing market's rolling over. Now, just back in December, okay, so let's call it 6 months ago, it was only 1 out of 10 had a price reduction. 1 out of 10. All right, so back in December, it was 10% price reductions. Now we're at 20% price reductions. Well, this is the fastest it's ever grown in the history. This has been recorded. House price reduction is just exploding higher. Why? Because the housing market's starting to roll over. Now, anyways, we know that the number of sales is down, right? Now, how long can prices stay up when sales are dropping like a rock? Look at new home sales down 26% year over year on volume. Existing home sales down 8% year over year on volume. Now, can they keep the prices up with sales dropping? I don't think they can. I think the housing market is starting to roll over. Now, what's having trouble in my area is kind of the luxury market. The luxury homes, the ones, I live in a rich area, let's say between 5 and 7 million. Those homes are staying on the market a lot longer. They aren't getting the buyers. They aren't getting the offers. They're staying on the market, and the price reductions are coming on those homes. The luxury market is going to come down a lot harder, a lot faster than the typical average home, which goes for about $400,000 in the U.S. Those will probably fall less, but the luxury market is already getting hit pretty hard. Now, this was fascinating. This was fascinating to me. All right, so anyways, the Hamptons, right? That's where rich people go to vacation. Well, there's a lot of vacancies there this summer. Anyways, prices in the Hamptons for rental homes, they're down an average of 26%. And inventory of rental homes is way up. If you want to go to the Hamptons and drop $10,000, $20,000 for the week, well, it might be a good year to do it. They're down about 26%. Now, this was also fascinating. I was reading an article where lobster prices have dropped. The price of lobster. Very fascinating. Are rich people running out of money? I don't think that's the case, but I do think they're being more cautious. Rich people are smart. They didn't get rich by being stupid. They did something right to make the money. Of course, they might have inherited, and they could be stupid, I suppose. But anyways, that's just a side thought there. But look, if rich people are starting to pull in, they're starting to be cautious. They see what's coming, and what's coming is a big collapse in the stock market, a big collapse in the housing market. By the end of this year, you're going to see inventory just spike onto the housing market, spike, double and triple from the level we're at right now. And this is going to shift. This is going to shift the market. The market's rolling over. Now, let's talk a little bit about this Airbnb thing. Anyways, their stock is way down, right? So I don't know if I'd short their stock, but they're having some problems. Look at, anyways, what's happening? Okay, well, I say we're already in a recession. Now, in a recession, do people travel more or do they travel less? When the recession hits, they travel less. That's a pullback on traveling. And corporations, they don't do the business travel as much. But Airbnb now, okay, so a lot of their homes, they've changed their policy. Let's say I go rent an Airbnb in the Hamptons. All right, I pay $10,000 to Airbnb. I bring all my friends and we go to the Hamptons. All right, well, let's say I bring a little jar. And in this little jar, there's like 5 cockroaches. All right, and I let 4 of them out, but I leave one in the jar and I catch it. Well, guess what? I don't have to pay that $10,000. The person that's renting that home, they don't get the $10,000. But here's the thing. They have to put me up in another place because their home is not satisfactory to me. Their home, they not only lose the rent on their home, they lose the rent. They have to put me up in another place, so they have to pay it. They lose double, right? Now, that's just what I hear. I'm not a rental expert. I'm not in the rental market. I sell homes. That's what I do. I sell homes. But the rental market is changing, and apparently for rich people it's changing, but Airbnb, they're changing their policies. I think Airbnb is going to be in a lot of trouble. Look, in California, we got a really weird situation. We still got 750,000 people still on eviction moratorium that aren't paying their rent. Now, this is going to normalize at some point, and I actually believe that rental prices will come down. Now, where I live, it's a tale of two cities. Now, San Jose is kind of the poorer area because it's towards the east side, and on the west side is the rich area where Cupertino, Saratoga, people want those school districts, right? So I got a buddy, he lives over in San Jose. Now, this was impressive. They lowered his rent. He's got a little 2-bedroom apartment. It rents for $2,400 a month, but they lowered his rent down to $2,000. Now the person that lives next door to me, they have a property manager. They rent out their house. Now, how they do it is they actually have a bidding war. They started the bidding at $4,000. The person that moved in is now paying $5,500 a month for a tract home. It's a 1,200, maybe 1,400 square feet tract home. But they have bidding wars because they want their kids in the Cupertino school district. It's crazy. It's the tale of two cities. But I do think there might be some rent relief when the housing market rolls over. I just think that's going to be a normal thing. House prices come down, the rents are going to come down because people cannot afford rent right now. Rents are too high. Look at when they have to go out there and buy food 20 to 30% higher, gas is exploding higher. They have to pay gas to get back and forth to work. They can't afford the cost of rent anymore. Something's got to give. Look at the evictions are going to be coming to California, and those places will become available, and I do think there's going to be a reduction in rent. Now, I know a lot of you in your area, of course, in your area, rents only go up, right? In your area, home prices only go up, but I think it's all changing. This is just my opinion. This is what I'm telling you. You can get out there and form your own opinion. Listen to me, listen to others. Form your own opinion. You're an expert also. Look, I'm not an expert. I'm just a guy with a computer and a microphone. That's all I am. I'm a real estate broker. Yes, I'm an economist, but it's just opinions I make, and you can make your opinions too. Look, the housing market is changing right now. I think you'll agree with that much, at least, right? At least. Nothing stays up high forever. If the number of home sales keep dropping, the prices are going to follow. Just my opinion. Anyways, it's Wednesday, everybody. Get out there. Have a great day. If you like my little rant, give me a thumbs up. Why not? Why not? I'm Tall Mike, and I hope you enjoyed this. Bye-bye now.